Alright, so in this video, we're going to be going over what a breakage structure is. What that is let's say we have bullish price action, meaning we're making higher highs, higher lows, higher highs, higher lows, and then it reverses and we start making lower highs, lower lows, lower highs, lower lows. To kind of put that into visual reference for you, I'll draw it out. So we're in an uptrend, we're in a bullish price action, we're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. What we want to see to indicate a breakage structure is a close beneath this recent low right here, right? So now we have this higher high made, but guess what? We drop and make a lower low, and then we make a lower high and a lower low and a lower high and a lower low and a lower high and a lower low. This right here is our breakage structure. So let's show you that on the charts so you can see how to identify that when we're actually watching and analyzing in the morning to see what is going to happen. So let's go on to Friday, New York session, so we can see how this would have played out. Um, so right here, we can clearly see we are in our uptrend, making higher high, higher low, higher high, higher low, higher high. We then see a break structure right here once we see price going down, but this is pre-market, we're not trading this. But then we see another break structure right here once we see this price going up, right? Then we make a new high, a new low, a new high, and a new low. And what we want to see from here is a close beneath this recent low, right? So we have this higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now we want to see a close beneath this low right here to indicate our breakage structure. And that's when we see this low right here, this lower low be made right here, making this a proper breakage structure, right? So if we're watching this live time, let's go to replay mode, um, and just show you what's going on here. So from what we're looking at right here, if we want to see price close below this low to indicate a break structure, right? Before we see anything else, right? So we're watching price, right? But then we see a new low form. So now for us to see a break of structure, we need to see price close beneath this low right here. Right? So now we're waiting. We see an even newer low. Oh, well, no. We see a newer high made. We can also see that price swept liquidity right here too, which is a key confluence we look at or we look for when we're trading. And what do we see when we see price sweep out this level of liquidity right here? We also see a bearish order block form as well, right? So now we want to see price close beneath this low. We wait. Oh, look at that. We made a new lower low. So now we want price to close beneath this low to indicate a break of structure, right? So now we're waiting, we're waiting, we're waiting, we're waiting. Bang. Right here. Price broke structure once we see this downwards close candle beneath this low right here. And what do we do from here? We look for a confluence that is respecting. So we see price break this structure right here. And what do we see? We see this bearish order block, right? And we also see this bearish fair value gap form as well. These are two key confluences we are looking for in the market as we're trading throughout the day. So what do? We wait for the retest, and that's where we're entering off of. So we're waiting, we're waiting, we're waiting. You see price sweeps out this low down here, which is what? Liquidity, as we went over in the previous video. Liquidity lies at highs and lows, right? Bang, bang. All these levels of liquidity gets filled out. Why? Because price hunts out liquidity. Price hunts out liquidity to fill out the imbalance, okay? So we'll play it out. right? We're waiting, we're waiting, we're waiting. You see price retest back up at this level right here, and that's what our entry would have been for the day of us trading. We would have had our stops up here and our take profit down here at this low, right? Because that's what we trade off of. That's not what we trade off of, that's what we target. We target liquidity. That's what this low is, or down here. This is liquidity down here. So that's what we're targeting. And guess what happens? Price respects these confluences and hits this target level of liquidity down here. Right? Bang. Break your structure. Let's show you another example. Let's go to Thursday. What do we have here? All right, so this is pre-market, right? We have equal highs right here, which I didn't go over yet, but we'll go over that. I think it's in, let me see. We go over that in the next video, actually. So we will learn about equal highs in the next video. These are relative equal highs right here, but let's see what we see. We have this uptrend right here, right? Down, up, and then we see what? We see a breaker structure right here. Once we see this candle close beneath this low right here, right? This is still pre-market, so we're not trading this. I don't normally ever trade until after the 950 macro, just because it allows for less volatility and it allows for us to make less mistakes when we're trading. So yeah, we have this breaker structure right here at this low right here, right? We see price hunts out liquidity all the way down here, and it continues to drop. Why? Because there's more liquidity even back here. Why? Because this is a low right here. Previous low means liquidity. What happens? After it sweeps out this level of liquidity, sweeps out an even deeper level of liquidity, right? And here, sweeps out an even further deeper level of liquidity. And goes on to sweep out this level of liquidity from Tuesday, from 2 days ago, right? And then what do we see? We see we're in a downtrend, okay? We understand that. We have bearish price action right now. So what are we looking for? We are looking for a close beneath a recent high. And where would that recent high be? Right here at this candle right here, because we got lower high, or lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now what are we waiting for? We want to see a close above this candle right here, right? And once we see that, that indicates our break structure. And what do? We enter off the retest of that level. So we could do something like this. Bang, just like that. And we set our stop so that we can either set our stop to the candle itself or the actual movement itself that caused the break structure. Depending on what the risk looks like, I will do either or depending. But then what are we doing? We're either targeting a fixed 3R, which would result in 109 points, or what can we do? We can target liquidity because we know price hunts out liquidity to fill the imbalance. Because why? That's how price works. It's a proven theory that it hunts out liquidity, right? So that's how we would have traded off of that. And what goes to show what goes to show this area right here is indicating a reversal after this gigantic movement down. Not only one do we have a breaker structure, we then have a 3-minute inverse fair value gap as well right here. We have a 3-minute inverse fair value gap right here that gets respected. So that's what also gives us a reason to be confident in this trade, is that we have this inverse fair value gap be respected. I actually showed this exact model or this exact example in the inverse fair value gap video. But that's what a break of structure is. It's essentially a reversal in price action. Like even then right here, we have a new high, a new low, a new high, a new low, a new high. But guess what happens? After we make that new high, this new low gets invalidated by making a lower high and a lower low, indicating a break of structure right here as well. And that's why price goes from bullish to back to bearish to down here. And we see now we're making lower highs, lower lows, lower highs, lower lows, lower highs. And then what do we see right here? We see a lower high, a lower low, a lower high, a lower low, and then we see a higher high and a higher low. So what are we looking for? We're looking to see price break above right here. And when do we see that? When this candle closes above that. Without this candle closing above that, that's not a breakout structure. If we're seeing something like, let me find an example. If we're seeing something like this, let me find a good example. So we're looking, we got a lower high, and then a higher low, and a higher high, and a higher low, higher high, or a lower high, then a lower low. This is all pre-market, so we're not trading this, but I'm trying to give you an example. Let's say, I'll draw this out because I can't. I'll try and look for one. If I can't find one, I'm just gonna draw it out to show you. Maybe we can find one on the 1 minute chart. And not every breaker structure is going to indicate a market reversal. Like this one right here, we see our higher high and higher lows be made. But what do we have right here after it breaks structure at this low? We have a bullish fair value gap right there as well. And price respects that. And that's why this breaker structure was not valid. But let's look at, let's see. I might just have to draw this one out because I can't find an example here. So let's say we have our uptrend, right? We're going higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We have our low right here, right? And price, let's say price sweeps out this low but fails to close below it. That's not a break of structure. If it doesn't close below that level, it doesn't make it a break of structure. Let me try to find another example of a false break of structure. Okay, this one right here. So we're in this uptrend, right? We have lower high, higher low, or higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Since this candle right here, since this purple candle right here doesn't close beneath this low, that doesn't make it a break structure. Now we're looking at the most recent low over here, right? Because we do it off the most recent low. We don't do it off of the previous low. Now we have a breaker structure right here once we see the close beneath this low right here. But what we also have beneath this breaker structure is not only a fair value gap, we also have two order blocks right beneath it. So it's easy to see a breaker structure that is not valid, and it's easy to see a breaker structure that is valid. Let's find another example of a valid breaker structure. Let's go to Wednesday. We see, let's see. You see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high, lower high, lower low, higher high, lower high. So there's not really a break of structure here. I mean, you could look at it like this. We have this uptrend right here. Then we're downtrending, going back to uptrend. And we see this low right here. Once we see the prominent close beneath this low, that actually does indicate a breaker structure. And we do have a fair value gap form as well. So that indicates the breaker structure. And we can either try to enter off of the retest, which it doesn't do, or we can enter off of the confluence that gets formed after the breaker structure, which would be this fair value gap right here, right? And we would set our stop to the top of the candle that formed the confluence. So it would look like this. And we set our stops right here, and we can either target 3R, which would result in 74 points, or we can target liquidity down here, or even liquidity down here, or even liquidity all the way down here. Why? Because price hunts out liquidity. I don't know how many times I have to say that, but that's what price does. It hunts out liquidity. Clearly, as you're hunting out these bigger numbers, you're risking more money, and you're risking a winning trade turning into a losing trade. It's not very often you see an 8R trade. What you can do in situations like this is take profit at this level of liquidity right here and leave a runner to go down to this lower level right here, so you secure profit but also have the potential to make more money. But let's show you another example of a breaker structure. Right here. We have our downtrend. We have our our lower highs, higher lows, lower highs, higher lows, lower highs, higher lows. And then we see this level right here get broken. That indicates a breaker structure to the upside. But we see price sweeps out this level of liquidity without retesting any of our confluences. And then what do we see? We see lower highs get made and lower lows get made. And then what do we see right here? Another breaker structure at this low right here, right? And then how we trade off of this? We wait for the 950 macro, right? That's what led price to sweep liquidity right here, right? Create this order block right here, right? And then what do? We target either a 3R or liquidity, which would result in something like this. We set our entry at the level of liquidity, or the level that structure was broken at. We set our stop to the top of the candle that broke structure, and we're targeting either a 3R, which would result in 88 points, or we can target liquidity at the bottom, which results in 161 points. So almost doubles our risk to reward. Exactly like that. So that's what a breaker structure is. It's pretty much a reversal in the market and a shift in market price action. Let's show you another example. Let's see. So we're already in a downtrend right here, but we see downtrend, 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 higher high. We see breaker structure right here, and that's why price starts going back up. And then what do we see? We see price fills the imbalance by sweeping liquidity, fails to close above it. And what do we see after these higher lows and higher highs made? We see right here, we see price closes beneath this, indicating another breaker structure. Why? Because we have this motion right here of high, low, high, low, high, low, or sorry, low, high, low, high, low, high, low, high, lower high, lower low. Now what do you have? A lower high. What do we do? Sweep liquidity. It's as simple as that. It's all breaker structure is. It's just a shift in price action from either bearish to bullish or bullish to bearish. Here, let's see another example. This is a good one. So we have this up movement right here, right? Low, high, low, high, low, high, low, high. So we can either go off of this low right here, which holds less significance since it's a tiny low, or we can go off of this low down here that holds more significance since it fills out this imbalance and shows that, yeah, we're no longer in bullish price action, we invalidate this bullish order block right here. And how do we look at this? We now see price break structure, forms two new bearish fair value gaps, one right here and then one right here. And what do? We enter off the retest that, or we enter off the level that it broke structure, off that retest level, and we set our stops to the top of the candle. Once again, we either target 3R, which results in 92 points, or we target liquidity. Because why? Price hunts out liquidity. I don't know how many times I need to say that. That's all price does, is it hunts out liquidity to fill the imbalance, right? So you can either target a 3R or target almost a 5R. That's all a break of structure is. It's just a shift in market price action. Just to draw it out for you again. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, oh, lower low, lower high, lower low, lower high, lower low. So when we see it break beneath this right here, that's our break of structure. So what are our key takeaway points of this video? Break of structures indicate a market reversal. They indicate a shift in price action, and it's essentially our key confluence when we're trading. Hope you enjoyed it. Like I said in the previous videos, now that you've learned about fair value gaps, inverse fair value gaps, order blocks, liquidity, and now break of structure, go to your chart, mark them out, spend at least 30 minutes. The longer you spend, the more the easier your eyes will be able to acknowledge it and understand it and see it in the market as it's happening live. And yeah, just go back, mark out your confluences. The more you mark these out, the better you will become as a trader. So yeah, hope you enjoyed the video. I'll see you guys in the next one.